Hi, this is Kim Watson. Welcome to a midweek forex analysis. I just want to do some technical analysis on some of the majors. Before I do that, just want to cover a couple of things. One was the subject we were talking in the room, but before today, which is quite important, it's the transition from taking an intraday trade into a swing trade and what you should be considering. And the second thing was in terms of we sent out an email, and it's just a reminder that I'm going to be doing 2 weeks of live trading from the 25th of April to 7th of May, from around about 7:30 in the morning, 7:45 in the morning, through to around about 4 o'clock, and it's all going to be on pivot trading. So the pivot traders, the people that bought the recent strategy CDs, and the members of the website there, we will be doing live trading for 2 weeks solidly of any trades that come up. Now, can't guarantee anything. We've had a good start to this week. Last week we had somewhere in the region of 32 trades that are triggered just on the euro and the pound alone, and that's excluding all the other majors. So hopefully we'll get quite a number of trades. It does generate quite a few trades, and successfully as well. So that will be, as I say, be running from the 25th of April to the 7th of May. Ideally, you need to get the CDs as soon as possible so you can watch those beforehand. Sam can get them out to you by latest really Friday. She'll get you them for Saturday morning, but sooner the better, really. So if you want the link to that, you'll find it at the bottom of the email that this link's being sent to you on. So you really need to get those now. And just a reminder, I got an email from one of our clients here, Arena, kindly reminding me that it would be worth sending another email just in case there are other daft lazy people like me out there. Now, I would never say that to anyone. They're just very busy people. So they're going to be getting busy and signing up and getting the CDs now. I can tell. Anyway, the analysis. Before I get onto the analysis, one last thing was the key thing of the transition of taking a intraday trade into a swing trade. Now, of course, we all get caught up as intraday traders into nice positions from time to time, and they start running intraday really well for us. We've had this discussion a couple of times in the mornings in the trading room lately, and I just always have to pin on a bit of a caveat to people that are thinking of doing this. It's great, and you can. In fact, the currency they're in is the Canadian dollar, and as you can see from here, it's been moving well. Anyone that got intraday short in on the 20th of January and held on to that, well done. 2,000 points or 1,800 points later, you'd be happy chappy or lady. Anyway, the situation is today he got short, got a lovely short position, was over 60 pips or around about 60 pips up, taken 2/3 off, so got a third running, and decided then to convert it and wants to turn it into a swing trade. Now, my point is this: is if you come out to the daily chart and you've got a 60 pips stop on it, let's just presume this is not a daily chart at the moment, it's a 5-minute chart. Would you have a stop halfway up the candle, or would you have it on the previous bar? Now, this stop here, actually I've got it here, even if we drag it to where the entry was, if I can't ever do things with technology. Oh, done that wrong. Okay, well, I'm going to move it up there and then adjust it accordingly to 60 pips. There you go, roughly 64 pips. You can see whether if the entry was at the lows there, you can see the entry. Well, where would you do this on a 5-minute chart? You'd be at the top there, and this is the key point. If because of the noise, intraday noise, trying to just say, well, actually I'm at break even now, I'm going to leave that position to run as a swing, you can just basically give your 60 pips away and not gain a lot more, because the market can move, as we've seen in the last few days, and the Canadian dollar's got an average daily true range of about 145 pips. So ideally you want to be about 145 pips away from entry with your stop. Ideally, technically though, you're going to be above the prior highs here, and it's just as I said, the important thing the other important thing is, where's your target? It's great thinking, well, I'm going to be in a swing, and you're looking to the downside here. Where is your target? Where's your stop? Where's your target? Because okay, I'm in the trade, it doesn't matter. I may have said I wanted to get short on the break of yesterday's low. in which case I need to stop there. But where's the important thing is considering the target as well. Is there enough? Does it all tie up to give me a good risk reward, and is there the potential to run down? Well, I'll cover the Canadian dollar in a moment, but it's just things to bear in mind, because you can get beautifully into that sort of intraday trade which you're going to run, and by the time we wake up, or later on in the afternoon, you get a bit of a bounce in the markets, and come 4 o'clock for example, and boom, it's taken out the stop that you're in. But then the next day, of course, it runs down and it's just taking you out. So you've lost the 60 pips. I say you've given back the 60 pips, but not gained anything from the experience. So important thing, transition is good. You got into a nice entry. Secondly, come out to the period you're going to be swinging in. If you're swinging on a daily basis, look at where the targets are. Make sure you've got plenty of target, and of course, make sure your stop's giving it the scope to work. And as I say, just assume that if it makes it easier, just assume that you're looking here at a 5-minute chart, and wait, you forget about the number of points or anything like this. Where would you ideally place your stop? Well, maybe some people would say up here further, but okay, realistically, if I'm wrong on this and it's divergence or anything like this, might as well get stopped out a bit more and maybe a bit aggressive on it, and bring it down to this sort of 130 area. So anyway, I just wanted to cover that off. It was a good learning point, and it's a point that, yep, it's good to have the transition with a position that you've opened up as a intraday trade, but consider swing, consider the target and the stop. Right, I've ranted almost. Let's get on and have a look at these markets. I'm going to just run through them very quickly. The euro dollar. Now, some of these I'm going to just click off the pivots for a moment, and there's some key things that on the monthlies here already. With the euro dollar, with this month we've run into the 21, the monthly 21 here. It's whether this can hold. We've seen, and I've talked about it for quite a long time on the morning updates and the last week's updates. We got this area of supply just around about 145.50 area, and it seems to be holding up retaining or restraining the price pretty well. Last week it just ran into it a little bit further, but just rolled back. And to be fair, from a daily perspective, up until yesterday, I was thinking, well, we're just in a little bear flag here, which it's going to run down and maybe come back down towards this monthly pivot, which is still untouched. But at the moment, it's erring towards the bullish side. Top side, to me, it has got potential resistance at that 145.50 area again. If we get looking for longs tomorrow and the next couple of days, just got to be a bit wary of that. However, at some point maybe it will move out the way, and we'll have opportunities to trade it further. But for now, that's certainly got some resistance up to that point. If we do start seeing a breakdown again next couple of days, I still like the idea of the monthly pivot being hit at some point at 112 area. So just watch out. We have, of course, Draghi speaking later in the week, so fireworks could happen. Okay, pound dollar. All right, I'm going to come out quick review of the monthlies. Let's get rid of these dog pivots for a moment. So it's quite funny actually when I'm looking at the dailies and whatever else. The market doesn't look too bad for cable, but when you come out to this monthly, you realise how weak the pound dollar is relatively. I mean, with the 2009's lows, we're not that far away from them. And of course, the big problem we have with cable is the risk factor regarding the Brexit situation and how the markets may take to that and traders may take to that. Pretty much erring towards it being priced into it to some degree, although I think if the vote was to go to exit, we could see a further reaction to that. But there's quite a bit, because of the concern of it, it's been priced in quite some way. Now, if we come back to dailies here, the interesting thing is here, though, we're actually at this point looking to almost get bullish. Now, we have got some resistance points at these different time frames, but we could, if we break this trend line, head up towards maybe even the 200 moving average and these prior lows across to the December lows there as some sort of point of resistance. But it's, as I say, it's at the moment erring. It really needs to get, for me to be wanted to be more long-term long. I'd like to see a break of this trend line here. We have got the higher low, the high and well, not really, sorry, the higher low, and we've made the higher high here, so it's whether or not this can be held on to and break through. It does. I'll be a bit more bullish, maybe even up to 146.50. Was it 146, 146, 147 area, even that sort of region with those prior highs back here. Okay, looking then at briefly a dollar yen, and we've got, let's just come again, get rid of the pivot so I can come out and look at the bigger time frames. Mentioned this last week in terms of the Bank of Japan. They do not like it, this strengthening that's effectively happening here as the dollar yen drops. They're not liking it one bit. It's too strong, and they were making suggestions they may intervene. Now, weekly basis, we did end up positively, and we started kicking back up again. So from a daily perspective, really, we've got to look at this, and it has, with that in the back of my mind, got the potential for upside. However, it still looks very weak down here. And just as we saw with the oil situation, the failed oil talks, Monday really did kick it back down, and you can see how quickly money goes back into the yen as we get concerns, geopolitical concerns or whatever it may be, commodity concerns in that case. Okay, but at the moment, I would still urge that we may have still put a higher low in there. We really need, if we break the highs from the 15th there, well, that's really confirming that high low. We could see maybe a pullback to the daily 50s. Okay, and finally, I'll just go wary of the time here. Okay, let's just have a look at this from a monthly basis, just looking at the Aussie dollar. The Aussie dollar is finally pushing back towards its monthly 200 here, so it may again find a bit of resistance. It may just run through to that 80 area, so it's got just above us, 78.60. May just push on a little bit further to the round number, but we have got potential resistance at that point. From a weekly perspective, we've got the 200 again, 79.63, sorry, 36 rather, so similar sort of area there. We got resistance, so it could just stall at some point. I was looking earlier on at the order book, but there seems to be little in the way of resistance above us. In fact, the order level says at 78 we've got a bit of resistance sitting there, but if the price pushes on now, this is certainly a lot more bullish than it was looking early in the week. I was concerned that we were running back to these highs. The reaction to the highs initially looked very weak, but we've literally, with yesterday, today, pushed out there now. As I say, there's not a lot of resistance in terms of order books, so it's just purely to the technical resistance that we may see as we push up now. And of course, speakers that may change things during the week. And finally, let's a quick look at the Canadian dollar. In fact, I'm going to do this. I'm just going to show you oil. Can I show you oil very briefly? There we are. Oil very briefly. Oil's made quite a good recovery, bearing in mind it got sold off quite strongly Sunday evening, stroke into Monday early hours through the Asian session, but made all that back almost straight away, and it's still, to me, looking like it could push up further here. Now, there are projections for it, but which you could totally got to ignore, but it does look like there is some potential for that to continue up to at least, well, short term to 42. If it can break that 42 area, well then the sort of key numbers that are banded about the sort of the $50 area, and there certainly is the potential for that. So that would suggest that Canadian dollar has got room to come down technically from that because of the correlation there. And let's just take this level off here, swing into a monthly chart for a second. And as you can see, there is some potential support here at 125.62, so there is some support potentially below us, which may just stall things at monthly 21. That's 25.62 to 123. So we break that well with the hundreds on the weeklies. A lot of people take a lot less focus of these bigger time frames, and we're pretty okay obviously on the dailies. From a pivot perspective, let's just put those back on there, and we've got plenty of room in terms of potential there. So area you've got. Just I would be watching from the bigger traders. Will be looking at those monthly figures, maybe looking at support into that monthly 21 there. So just be very aware of that. Okay, in terms of order book, it's the interesting thing is there's a hell of a lot of sell orders sitting above us. So any retracement, any decent retracement. In fact, I'm just going to bring this order book in to show you any decent retracement. Look, I mean, it's just bundles of orders at the moment sitting above us. It does look like there's potential for that things to stifle somewhat. In fact, actually, let me just bring that back in 1 second. Bring the right one back in. There we go. And I just needed to bring it back to the price, the actual level. There we go. So well above us, there's a whole stack that's built up. I'm sorry, I was back here. You could see the historical figures. Let's just look at the current figures, and you've got this huge sales orders. You can see around about 127.25, some of that region. They'll be starting to build resistance at that sort of area. So that's lower than where we are at the moment. Higher, just fractionally higher from where we are at the moment. So this does look like it's got some reasonable downside opportunity. Okay, that's it for me. I hope you have a great one. As a quick reminder, once again, orders for if you want to come and join me for 2 weeks in the Pivot Trader room that will be there for 2 weeks. You need to do that now. Thanks a lot. Bye for now.